Taking a look at the bond markets today, actually 10-year futures slightly lower after a big run up in the last 5 days. We see a little moderation today, 121.10 is the current level. We did see some pretty decent activity once again on that March contract. We're looking at about 1.725 million contracts traded today. Yet you continue to see this upward pattern in the futures, and that hence pushing yields lower. So we see this continued activity in the futures. We had seen a big rally really since the November 8th low, and now again as we see that yields coming under some significant pressure. Looking at the yields, the 10-year today currently right around 277. We saw a range for the day of 2748 on the low end and 2794 on the top end. So right in the middle of that range, but again holding here at these levels where we have not seen these types of price yields for the 10-year future really going back to April. You have to see April of 2018 to see the level, the current level of the 10-year note. Looking at some of the driving forces today, we're seeing again the potential for a government shutdown playing into the equity markets and therefore being transferred into the bond markets. If you see volatility in both spaces continue today, even intraday, we saw once again the 10-year yield, let alone the other yields, the 30-year as well, very volatile today as it anticipates and sees the different price movements in the equity markets. So we had government shutdown in the markets today. That's playing out over the next couple of days. We also have a Department of Justice charge today that really impacted the markets intraday. We're going after some Chinese nationals who maybe compromised some of the government information. And we also have global slowing. That theme continues to play out in the market. It's leading to, again, increased volatility. Once again, we're seeing equity markets under pressure, and the bond markets continue to find a bid on any type of further selling pressure in the equity markets. Also, looking at the curve, the yield curve continues to flatten. We see the 210 now around 10 basis points, very low, again, low end of the range really for this cycle. So you see that middle zone continue to tighten. We did see the short end of the curve actually, we saw rates up slightly today, so that's another focal point here, but the 10-year continues to moderate, and we saw the 30-year actually down on the day. So once again, that theme of the flattening yield curve plays into the recession mindset of a lot of market participants, and therefore we continue to see the volatility play out across both the equities and the bond markets.